Yes. What's going on, family? What is up? What is up? What is going on? Welcome to today's stream with the Prophet Society Gang family. Go ahead and drop those locations in the chat as you're tuning in. If you can hear my voice, drop those locations. Let's see where you're plugged in from, because we got major news dropping in about 15 minutes, and it's gonna be I don't want to say it's gonna be interesting, because I'm pretty sure almost everybody knows exactly what to expect. But it is going to be something that we can have some discussions about, especially when it comes out, see how the market reacts. And then we can come up with some decisions as to what we think can happen moving forward, right? But I see we got Rotterdam in the house, the Netherlands. What's going on, Mick? Good to see you. Right, we got New Jersey, Savage Land, USA. What is up? We got Trinidad. We got Rotterdam in the building as well. Shout out to my brother Solo in the house. Matthew, what's going on? Welcome. We appreciate you guys for tuning in today. We do got the whole gang on the call. We do got the boy Skaggs, the boy Kyle. And you guys know when we're all on these calls together and we're talking that news talk, that fundamental talk, man, it's nothing but value that gets spitting out, right? So I'm excited, family. Go ahead and smash that like button as well. Share this video, all right? Smash the like button and share this video out. Let's go ahead and get these likes up. Let's go ahead and get more eyes on the call, because we got big boy news dropping in about 15 minutes, family. So just a little quick recap, right? We do have the federal interest rate decision. As of right now, they are expecting to raise interest rates by 25 basis points, which is, again, something that has pretty much been expected ever since the last reading as well, all right? The last interest rate decision. So I'm interested to see how the market does end up reacting to them raising interest rates. And then we're going to have the discussion. I mean, I'm pretty sure some people might say that it was already priced in, which I'm pretty sure as well. I'm leaning towards that way. But it's still going to be interesting to see how the market does react, man. Because, again, this is a big boy decision, right? The Fed interest rate decision is probably one of the most important news events by far that we've been pretty much anticipating, right? Although, as at this point, it's kind of predictable as what they can do. You just never know, right? And, in fact, I want to bring up the Reserve Bank of Australia for 1 second, because they also did something that was kind of unexpected with their interest rate decision, right? They were actually at a point in their, you could say, in their decision making with this, that they actually were supposed to keep it the same, right? Because they're one of the first central banks to actually pause, right, in terms of interest rates. They actually held this 3.6% for the past two meetings. But look what happened on Tuesday, yesterday, right? They actually did a surprise shock and raised interest rates by 25 basis points, right? Now, obviously, there's probably a lot more factors that had to come into this, but I'm just saying I do fully expect them to raise 25 basis points, but you just never know, right? Again, this was unexpected. You just never know. So it's definitely dope to come on here, communicate with you guys, give our thoughts and opinions, have some back and forth if that's what happens. But overall, it's more so based on educating you guys and just giving you guys a little bit of more value from a fundamental side overall. All right, but let's see who else we got in the building. I see we got Eric in the house. What's going on, Eric? I appreciate you, my brother. All right, we got Tampa, we got New Mexico, Rotterdam, represent Texas in the building. Austin, what's going on? Good to see you in the chat as well. Go ahead and smash that like button, family, if you guys are tuning in right now. All right, pause the video if you have to. Just definitely go ahead and do us one favor. Definitely smash that like button. All right, but family, how are you guys feeling, Skaggs, Kyle? How are you guys feeling about this news event, man? What are you guys your initial thoughts about the event? What do you guys think? And let's just start the conversation, man, because I'm ready for it. Let me see.
Yep. I'm excited. To be real, I'm leaning more towards the side that dollar is just going to continue going to the downside. Um, you know, you know me, I'm always looking for the continuations over trying to stab at reversals in the market. So, just being real, at the positioning that we are in the market, the US dollar has been trending down for a very long time. And, there is a possibility that, it does, make its bottom out here, but I don't think it is. I'm not in the world of guessing bottoms and guessing tops. So, if you were to ask me, I'm in I called out a GBP USD buy this morning, to our community. If there's anybody that's still in that trade, drop a dollar sign in the chat. Or if you made some money, drop a dollar sign in the chat. I was just going off the back of the fact that the dollar has been very, very bearish, and we're just going to continue playing positions towards that. So there are some people that are probably still in that trade, and if you are, good job to you. I think this news release will pump this trade in the direction of that favor a lot more. Same with EU. I feel like EU is going to continue up. USD CAD. We might get an entry on USD CAD, to be honest. It's more of like a bearish trade, but it hasn't yet taken off the station yet. So, I'm leaning towards the dollar continuing towards the downside. That's me.
Now, is that no matter what the interest rate decision come out as, you're sticking with that?
I mean, obviously the interest rate, obviously when it comes out, I might have to reevaluate if it's not in my favor, but I feel like the news will go in my favor. That's just I'm betting on that. Now, can I be completely wrong and the news come out and we get something in the interest rate decision that, completely goes against what I'm saying? Yes, that most certainly happen. And I will have to adjust and, look for positions in the other direction if that does happen. But for now, I'm going to stick with my bias.
Okay, so whether it comes out higher or lower, you're still just dollar bearish.
Yes.
All right, cool. Interesting, man. Yeah, nah, I mean, you definitely called out a banger, family. I don't know about y'all, man. If y'all wasn't on this morning's call, which obviously, if you're not a part of our premium service and you weren't, this guy called out a 1 to 5 risk to reward, an absolute banger, risking 8 pips to go for around 40 to 50 pips. And I mean, it all happened within about an hour, hour and a half, right? Which is absolutely crazy. So big shout out to to my boy Kyle. Called out an absolute banger. Literally, maybe a pip of drawdown. Maybe it might have been half of a pip of drawdown. To be honest with you, right? That was just instant profits immediately. So that was an absolutely phenomenal trade, bro, for sure. Shout out to you guys that are part of the premium too. That were able to catch that. It was an absolute banger, right? But Skags, my boy, how you feeling over there, bro?
Hey, I'm feeling good. I feel like we're about to get the last interest rate hike from the Fed, at least for the time being. But that would be my thought today. Yeah, we're looking at the last interest rate hike. Probably expect a 25 basis points. Um, I don't know if they will state this. They might. I don't know if Powell's going to state it, perhaps, but they're going to ask him about it, right? Because we are out of room in terms of like the projections. So I do believe we're going to be looking at the last 25 basis points. I do think the market will be pricing in future pauses. In fact, I think the market has been doing that most of the week and probably the past 2, 3 weeks already anyway. So yeah, man, I think we're finally getting to these like inflection points where inflation begins to teeter and go below our interest rates, and they just kind of continue to hold up here. I think the Fed will be overall pretty happy with some of the numbers they've seen recently coming out of the market, or at least coming out of the data points, things like CPI, PPI, PCE. They'll probably mention the labor market remaining strong. I mean, so be it. It is, it has remained strong. We don't really expect anything to teeter over in that area just quite yet. But I think all things considered, the Fed will again begin to look at the idea of just holding rates up here at above 5% over the next 6, 9, maybe even 12 months, full year. But yeah, that's where my thoughts are at, bro. Like we're finally at the point where I believe pauses are on board after today. There is even maybe the potential that we get like a shock pause, like we don't actually even increase rates today. I think there's like a 4% chance of that though. So that's you're more or less kind of playing the lottery. But in terms of like the way I'm going to play charts, I really at this point, again, I am also a dollar bear. Um, I mean, do you get initial reactions to the upside simply because interest rates have went higher? Right, that does make sense. Again, we are coming to the point where we are increasing them, so that should give the dollar a little bit of a spike. Sometimes you don't get this because again, the market anticipates the pauses coming, so any sort of spike up just gets kind of absorbed. So I don't know if I'll actually play anything. If I do play, it probably would be a spike down on SPX or Nasdaq. That would be the only thing I'd be looking at. But on the dollar foreign currency pairs, I probably wouldn't look to play. Kyle got a nice trade this morning, like you guys said, that 1 to 5. I think that was probably one of the better positions you could have taken this morning. So shout out to him. But yeah, I'm really on the sidelines, just waiting for the Fed to do what I expect them to do. And if there an opportunity presents itself on indices before Mr. Powell speaks at 2:30, then I will of course take those as well. But yeah, that sums up my thoughts. So hopefully everyone in the chat, hopefully that's clear for y'all. Shout out to you guys in there. Let me know what you guys think as well. Do you guys agree with me and Kyle? Or are you looking at, longer term bearish dollar, bullish indices, bullish crypto because of the potential incoming pauses? Or do you guys believe that maybe the Fed isn't done, right? But let us know in the chat. We love to conversate with you guys. We do have about 5 minutes here before the news officially drops.
Yeah, no, that's interesting, miss. Let me go over the comments really, really quickly. I see we got 518 in the building. What's up? Alex is asking a good question. Isn't the 25 basis point already priced in? I mean, I would assume so because it's not a surprise. I mean, it's something that, again, is just following their plan, right? And that's why we actually look at, the summary of economic projections that the Fed actually releases, because it pretty much gives us a blueprint as to what they plan on doing in terms of interest rates. And I mean, it's literally just following their plan, right? And since they're following their plan, then I would assume that it was already potentially priced in, but that doesn't mean we still can't have no opportunity to get involved. Now, the big question that I got, right, and this is for both of you, right, Skaggs and Kyle, right, with interest rates going up, all right, are you guys pretty much betting that it is priced in as to why we're seeing, you're expecting more so dollar weakness? Because traditionally interest rates goes up is usually more so of a sign of bullishness for the dollar. So what is your guys' thought process? Are you guys saying that it is already priced in?
The market lives in the future, not in the past.
So you're
Which
saying
means,
it's already
yeah,
priced
I
in?
believe it's priced in. Yeah, the
Bro,
market.
bro is speaking like Darth Vader right there.
Yeah, no, it's not.
Nah, you gotta throw the wisdom at them, right? You gotta
Oh.
you gotta add that little inflection, right? Make you really ponder and think about it. But nah, really though, yeah, it's mostly priced in. Again, the market looks forward; it doesn't look behind. So even if it, like I said, even if it does come out and initially you get that immediate spike up, I don't think any of that holds. There's no reason for it to, especially if Powell comes on talking about pauses. The data looks great. We're getting a handle on emotions, or not on emotions, on inflation. If with all that in mind, man, like there's really no reason for them not to pause. I mean, this, as far as I see it, is the last
Mhm.
interest rate increase before the pause. So I mean, if this stuff does rally, I'm looking at sells all day. Maybe not immediately, maybe right before Powell speaks. It's really just going to depend on how stuff sets up. But yeah, I would assume it's priced in. It's been priced in for a long time, I think.
Yeah. No, it's definitely very possible for sure. Interesting, man. I mean, again, I also want to bring up, and we only have about 3 minutes, family, less than 3 minutes, right? So I'm gonna make this quick, right? But I also want to also take into account with, and somebody actually in the chat mentioned it, right? But the whole situation with the banking situation, right? That also is going to be adding a lot more fear, right? Now, obviously, that's a little completely different than what we're talking about with interest rates, but that's still something that is also on the horizon, right? So, how would you interpret everything with the banking situation into what we could see today? Again, it's
How
not
do you fix
directly
that issue?
correlated. It's not directly
Why
correlated, but
why are banks failing, Abel? Let them know. Tell them why they're.
because of interest rates.
So what's the most logical thing to do to save the banks?
I mean, they're gonna raise it.
They're gonna raise it, but going
The most
forward,
logical thing is to
if they didn't
stop.
want to hurt, if they didn't want to hurt more banks, what should
hmm
they do?
I mean, what they should do and what they are planning on doing are completely different things, though, right?
That's true.
Obviously,
That's true. But
because
again, the banks are failing because of over tightening of money.
wait, yeah,
So
100%, 100%, I
it,
agree
it,
with
it
that.
may it may be on the bank's best interest to stop tightening up money so some liquidity can flow down to these banks and save them. It's hard to save something when you don't have available liquidity in the market. So I
Yeah.
think I think the bank failures, yeah, they pose a risk. There's definitely price risk. But I think when you're looking at the macro and you're asking what the Fed will do with interest rates, I think the bank failures only kind of add fuel to the fire of, okay, inflation's coming down. We could probably be more lenient. We could probably, lay off the interest rates. Because again, the banks failing is a direct result of liquidity being dried up, and that's
Mm-hmm.
that's a direct result of higher interest rates. So
Yeah.
if you're worried about the banks, you should definitely be rooting for the Fed to pause here.
Oh, I believe they were going to pause regardless, right? Whether the banking situation happened or
That's
not.
probably true too.
But yeah, I definitely see what you're saying. Like they kind of have to now, even more than even they wanted to before.
Yeah,
Like let's
imagine they
see.
tightened more. Imagine they raised interest rates another 1%. There would be no faith.
Oh yeah, no, 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 hell no. We'll be seeing
But
a
yeah, let's see what
lot
the
more
actual
crazy
rate comes
numbers.
out as. I don't think we'll be too surprised here, and then it'll just be waiting on Mr. Powell.
I'm more surprised on the reaction that it comes out on. So I mean, let's see.
Yeah, I don't think we need to look at the cal. I mean, I'll keep an eye on the calendar. I'll let you know. It's
Yeah, we could.
surprising by any means.
Let's go ahead and yeah, let's see, let's see. So we got 2 seconds. So initial spike right here. Let's see. If it comes out on your guys' end, family, go ahead and just drop the
It's
number out.
5.25. I already have it.
Golly, what the hell you pay for? Oh, there it is. Yeah, so it did come out as expected. We seen an initial spike down right here in the dollar, but let's see. All right, there we go. That's the drop you guys wanted to see, right? Let's see how's everything
Yep. See,
else.
look, everything right to the moon.
All right, so the gold is flying, the dollar's dropping, euros flying, S&P indices are moving. Indices are like whiplashing a little bit.
Indices,
Interest.
yeah, they spiked down for a second, but there's that weakness. Again, we'll have to see if this holds throughout Powell. It probably will only get more intense through Powell.
Hmm.
But yeah, shout out to the people that are sell side dollar and long indices. Again, I would have preferred to see it spike down a little bit more. I don't really trust that 30-second kind of flash spike, but nonetheless,
Stay woke.
we'll see
Stay
what Mr. Powell
woke.
has. I'm looking if we can get pullbacks on things, just to give you guys the only trade I'm looking at would be the S&P 500, and I would be interested at two prices depending on how much volume comes in on Powell. I'll be either looking at what is more or less 4109,
Hmm.
or if I can get Powell to make a whole new low at like 4086, that would be ideal. But I think based off reaction so far, you probably don't get either of them. But I'm gonna sit here and hope and dream that Mr. Powell says something to spook it, because I would have loved to see reactions down.
Yeah, I mean, the only way he's gonna say something that spooks it is if he gets asked a dumb question by the reporters. That kind of forces
Yeah,
him
and
to
specifically, I think around the labor market, I think that would be the one thing.
yeah, because Jerome, he's gonna tiptoe around a lot to try to not spook it. But then there's certain
Yeah,
questions
Fed
that
opens door to rate hike pause. Fed drops language that it anticipates more policy firming may be appropriate to attain sufficiently restrictive stance. Fed, in determining extent to which additional policy firming may be appropriate, it will take into account tightening to date, policy lags, and other developments. Fed repeats the U.S. banking system is sound and resilient. Fed says vote in favor of policy was unanimous. Tighter credit conditions likely to weigh on the economy, hiring, and inflation specifically. Job gains have been robust and inflation remains elevated. Job gains have been robust and then again, inflation remains elevated. So those are the headlines coming out from the Fed. As more headlines continue to come out, I will continue to drop them. Actually, there's another one here. We will continue reducing the balance sheet as planned. Nobody's surprised by that. So those are just some of the quick little things from inside of there. Again, credit conditions likely to weigh on the economy. Again, still studying that hiring, those jobs that we talk about, right? The labor market still remains pretty high, and they still repeat that the banking sector is safe. But as we've seen, that's not entirely true for small and mid-sized banks.
yeah, they're saying this was a unanimous decision as well to raise interest rates, which again is
Yeah,
not a
so no
surprise.
debate about that. But it did say Fed opens door to rate hike pause. So that's what the market is going to trade off of. That is, out of all the headlines that I read, that's what we're looking at. So hopefully some of this stuff pulls back again. I'm looking at 4110 on the S&P. And Abel, I don't know if you have a level you're looking at, bro. Maybe if you want to give some insight as well. I'm really just torn depending on whether or not the hour structure is gonna hold.
Yeah, I mean, I don't know, man. I'm still a little torn to be honest with you guys. I really am. Obviously, because of the fact that they're saying that a pause is on the table, this should bring some type of hope, in my opinion, obviously to the market, right? To investors, to traders, to the big boy decision makers. So yeah, we even if we do spike down a little bit, right? There could be an opportunity for us to go ahead and buy that up off of that data here for the S&P. But I don't know, man. I gotta see. I gotta see. Let's see. Anything else?
Yeah, it's enough for me. The bank risk and the really out of out of scope of things, China risk, excuse me guys, I'm sorry. Are the only things I'd be concerned about. And I don't know. The banks are a day by day thing, so I'll take that as it comes. But if Mr. Powell could send us a little lower, I'll probably try to fade some of this off into the end of day, I think.
Yeah, and look at this headline right here too, from a guy named Blake Millard. If this is the last hike, recent market history shows U.S. equities have generally rallied in the months following the end of past Fed tightening cycles. Interesting, right? In the 3 months following the peak Fed fund rate, the S&P 500 has returned an average of 9%, ranging between 14% and negative 1%, and rising in 5 of 6 episodes. I mean, yeah. So again, if the fact
That's
that
what I'm
they are
saying.
talking about it, man,
If they're
like,
truly pausing, man, it wouldn't be a bad idea to try to get in.
yeah, I mean, yeah, I agree. I agree.
I
If
just
it,
think what's going to happen on the S&P and what's happening now is that, like, again, that headline's obvious, right? So if the immediate headline comes out that they're looking to pause, what's going to happen is what those people trading that news is probably going to get like liquidated. So I want to see some of these like ranges kind of get taken out, and then once they do, I'll have the confidence because just because the headlines say one thing doesn't mean it'll immediately trade in that direction. So I do want to see some of these earlier traders get ran on. Um, Before I take a position. And if it never happens, then so be it. I'll come back to the markets tomorrow and we'll play at a more appropriate time because it is late in the day here.
yeah, I mean, I'm with you. I would be interested in looking for some longs, but I think you said the 4110 because that's around the same level too, around below
Yeah, below that
4110.
4110, I want to see if we can just swipe that.
Yeah, that'll be dope.
Yeah, I did buy earlier at the 4120, but I don't think that ends up holding it. Or no, what was it? So the thing is that what you see on TradingView and what I have on my broker not going to be the same. But I'm in at 4121,
Uh huh.
which on TradingView is more like 4118.
Yeah, for sure. All right, gold gave us an initial spike up. Pretty much came back in though. The dollar is still obviously maintaining itself lower. The euro should be spiked up.
GJ with no reaction, huh?
Zero. You guys think the crypto bottom is in? I mean, we've been personally calling the crypto bottom being in for months now. Like, we have been calling the crypto bottom being in down here. All right. Some people listen, some people don't. Majority didn't, but yet the market has rallied, 80, 90% since then. Um, and if the Fed is actually going to pause, which is probably what they're going to be doing, then this is only going to cause for more upside here on cryptos for sure.
Swipe that range though for me one time, please.
Yeah, that would be phenomenal.
Yeah, that'd be like prefer kind of like you see previously that same.
Hmm.
Not even to the left of that, but
Yeah, I see
yeah,
what
when
you're
we had
talking
that
about right
last
here.
dip, yeah, inside of there, yeah, it can be that same kind of sweep. Like maybe we don't get it for a couple of days, maybe like a week or two, but give me that sweep, and I'm I'm back in with some more money.
Yeah, yeah. So I mean, we've been calling it. If you guys been on our calls, it shouldn't be a surprise neither that we've been calling the low from down here when everybody else was calling us crazy. Legit been in arguments over this stuff, man. But
Yeah, don't worry. There's still, I mean, you still got a year on the halving clock, which I'm gonna make a video for you guys on because that's my favorite event ever, and we are approaching in about 2 3 weeks. It'll be officially about 1 year out from that, so on May 24th ish, 26th, I will. Okay, when we get closer to that date, I'll drop the video for y'all
Yeah.
and give you guys just a bigger macro perspective. But I'm gonna wait till we get closer to that because this range has been kind of annoying, and I do want to see how stuff plays. We do have 20 minutes till Powell. There haven't been too many additional headlines that have come out. I am using a paid service, by the way, for my headlines. So I do get them a little bit earlier than they pop out. That's how I knew they kind of held the 25.
Uh-huh.
FOMC statements use language broadly similar to how officials conclude their interest rate increases in 2006, with no explicit promise of a pause by retaining a bias to tighten. Okay, so there hasn't been, again, like I said, this was the question, right? Are they going to flat out come out and say that they're going to pause? And again, this is reiterating that they've not done that. Maybe Powell still does. Maybe he answers a question in a way that does give the market some hope. But I think even beyond their comments, I'm pretty sure most of the market has come to the conclusion that they are pausing. I also think it
Yeah.
doesn't make sense to announce a pause at this release because a pause would make more sense to announce when we're giving out economic projections rather than just releasing interest rate statements. So
Mm-hmm.
it's possible
Yeah.
that they hold off.
Mm-hmm. Yeah, no, it's gonna be interesting to see what he says for sure. I mean, I don't know, cause it is kind of tough though, cause if he does come out and just flat says like, "Oh, we're pausing," then that is gonna bring a lot of demand for equities overall. I don't know if he's gonna do that though, right? Cause he doesn't want to have any slight chance of causing people to start, obviously doing what they do to influence inflation again. So it's gonna be interesting to see if he flat out comes and says it, or if he's beats around the question itself.
Yeah,
Cause you know,
I think he beats around it though.
yeah, they're gonna ask him, so it's gonna be interesting to see.
Yeah, I think it just makes more sense to kind of beat around it because unless they're fully confident that they are going to pull, I mean, who knows? Like maybe data upticks and they can backtrack. So like it would be less impactful if they in case they do have to go like one higher or something
Mm-hmm.
like that, then they're not like committed to having to like backtrack on their statements. So that's really why they do stuff like this too, is like because they know if they come out and say it, that if they have to take it back, the impact on the market is gonna just be, catastrophic. Like you're just gonna have, you're gonna hit like hard stops on the day for that.
Mm-hmm.
So that could be a reasoning too. Again, like I said, it doesn't make sense this meeting, I don't think, but he certainly could.
He might be forced into to saying something that could obviously
Yeah,
give
them
it away.
questions really try to trip him up. Depends
Yeah,
on who asks some questions. There's some people are ruthless with the questions, man. They'll really try to put him in a corner where he has to. It's tough. Did you guys see the leaked video? I don't know if anybody's seen it. I wish we could play it. I don't have it really readily available. But the leaked video when he thought he was speaking to whoever he thought he was
it
speaking
was like
to.
somebody in Russia, I think it was.
Yeah, I think he thought, yeah. And they were talking about the economic state, and he was, and again, like in situations like that, he's willing to say, like, yeah, we need unemployment to go up. Those are things that he said, like, yeah, we need unemployment to rise. We need, jobless claims to continue to go up and stuff like that. And they won't say that publicly because again, they don't want to spook the market.
Yeah,
But in private, they're not scared to say it. That's conversations they definitely have. So I think they've
yeah.
had those conversations privately. They're just not ready to share publicly with us.
Oh yeah, 100%. It's gonna be interesting, man.
I do. I want this SPX to drop a little bit more though. Let me get some buys in from Mr. Powell here. Yeah, I was gonna say I thought it was Zelensky, but I was like I thought it was didn't make sense that he would be talking to somebody in Russia, and I was like I don't think it's Zelensky though, but I'm pretty sure it was Zelensky. I think it was Russian hackers that like made him believe that he was talking to Zelensky. But yes, it's kind of funny to see the head of the Federal Reserve get faked out by AI voices. That's
That's kind
nuts.
of scary if you really
That's
think about
nuts.
it,
Yeah, I
though.
know.
Like,
That's so crazy. That's so crazy. I was just talking to my parents the other day. There's like been a worry going around. And like you as a parent should be aware of this too. You should have conversations with your kids. You should make a safe word because apparently there was a mom that got like one of those fake scam calls but it was like about her like daughter basically being held for ransom, but they made an AI version of the daughter's voice, so you could hear the daughter in the background like begging for help. And I'm like, that's nuts. I'm like, so now you got parents falling for stuff like that. You got the Federal Reserve head thinking that he's talking to people and being recorded. Man, what a time to be alive.
That's
Truly.
scary. That is super scary.
Yeah, that was the
Let's
headline I just read. That's interesting that was 6 minutes ago. Let me see. Am I paying for stuff that's worth it?
shout out to my
That was
guy
also 6 minutes
Nicholas.
ago.
Yeah, let's see. The Fed ain't even Fed. Yeah, I mean everybody should be aware of that by now at this point. What do you think of gold? I know Mick is ready to push the button. Mick loves loves pushing the button. I mean, gold is interesting, man. I mean, we clearly reacted very bullish off of that off of that news, off of that data, but I don't know if it holds or not, though. That's gonna be the question for a lot of these things. Do they hold until the
Family, we've
actual?
been live a few times for FOMC here, right? What do you guys think that I expect to happen? All right, if you're looking to trade gold, just go back to gold for a second, because all these other ones are kind of bad examples. All right, what do you guys think that I expect to happen with this gold chart? Right? I want to see if anybody knows. Right?
You want
Based
it in
off,
this
you
time
don't even
frame?
have to zoom that far out. You could literally just zoom into current price if you wanted to. None of that stuff to the left even matters. Right? When Powell speaks, right? What do we expect to happen? Short's not the right answer. Sure, I'm not asking about direction. I'm not really giving you a directional like buy or sell type thing. Fold to two. No. Let's see. Get a couple more here. 2006 down fly. Right, yeah. See, a few of y'all got it that have been around. Right? The wick fill. We expect the wick fill. The wick is probably gonna fill. Right. So jumping in preemptive. I mean, listen, if you have your confirmations, by all means, don't let me talk you out of your trade. I'm just narrating the way I would play this if I was looking for a position on gold here and I knew that Powell was gonna speak in 15 minutes. I'm gonna see if that wick wants to fill. Like, I'm not gonna play with that wick. Right, because again, that wick is fundamentally correct. Right, let's make no mistake about it. Fundamentally correct, and especially expecting a pause. Let me rephrase that. Fundamentally correct if you're expecting a pause. Right, so I would need that to fill and us to start to erase. But untested, nah, I don't trust that wick, not at all. So that is what I would expect. Again, do we get it? I don't know. Sometimes you don't get it. Sometimes it like half fills, like baby fills. Sometimes you don't get it at all. But for me personally, in order to execute, that thing needs to fill. So
Mm-hmm.
just be aware if you are going to take preemptive positions. Again, I'm not even really bearish like that. So I would rather just, if this is going to fall, I'd rather just not be involved in it, and I'll play it later.
Mm-hmm.
I'm happy. It's good to see the few of you that got it.
Yeah. Now, shout out to you that pay attention. That's the biggest thing. Let's see.
50% of that engulfing candle doesn't have to be 50%. Oh, unless you mean the buy side.
Let's see.
In that case, no.
Almost a Litecoin halving a few weeks, I think. Interesting. Did you end up
Yeah,
getting paid, Big?
Litecoin does have before yeah, Litecoin's having is a little bit before Bitcoin's.
Eric, to answer your question, Eric, no, I have not gotten paid yet on the GJ bet. I think he's gonna milk that
Nah,
thing all the way
so
out.
did we hit 175 though?
I mean, listen, man.
If it hit 175, I mean, listen, I already told them too. I was like, I'm not gonna buy. Just know, me and the premium discussion, me and the premium chat had a discussion about how you're gonna receive your payment.
I don't care how I receive it as long as I receive
Ah, nah, don't say that because they had some
it.
creative ideas. Don't say that.
Listen, y'all be
The
creative. Y'all
chat
be
really wanted me to do you dirty.
listen.
Don't say that.
Legal tender is legal tender as long as it's legal tender.
I mean, I was just not gonna pay you till the FX summit. I was gonna just hand you $100 bill in Miami if it hits it before that. I was just gonna make you wait till Miami.
Oh no
They
no
were
no no
like,
no
oh
no no
nah,
no
get
no
them.
no
They were
no
like,
no
nah,
no.
pay him in pennies in
Oh
Miami. And
no
I'm like,
way,
nah, I'm
man.
not gonna pay him in pennies,
Listen,
bro. I'm like,
listen. I'm gonna be honest, bro. I need to get paid the moment it touches. that
I see. That's
175.
exactly what I told him. Like, that's what he's gonna
Like
want.
the
I'm like, the second it
moment,
hits 175, he's gonna blow me up.
like
I'm
the
like, in that case,
moment, bro.
I'm gonna just tell him like, nah, I got you. I'm just keep sending him pictures of the $100 bill. Be like,
And you're gonna
you
get
gotta
charged.
come claim it in
Guess
person.
what? You're gonna get charged interest every day you're late. 5% interest
Hey, listen,
every
I'll
day
see you
you're
in
late.
small claims court.
Then we gonna have to take that. I need that
Me and you can go
immediately.
on one of those judge shows.
You know what's crazy, bro? Like
We'll
I'm
act
gonna
it
need
out in
that.
front of Judge Judy.
I'm gonna need that so much that I'm gonna go through every broker. I'm gonna go on Trading View, and whichever one touches 175 is the broker I'm going with. Like I don't care if the broker hits it
Yeah.
before Trading View, then I'm showing that screenshot. I need that
Yeah, shout out to you
immediately.
guys that are going to the FX Summit. We will be there
Oh yeah,
at the expo. Of course, SPX wants to turn around and rally now before.
it's all
Man,
good. It's all good. It could come back
yeah, come
still.
on, Powell, give me something. Give me
I
something, bro. Come on now,
I do have
Powell.
the press conference already brought up as well, family. So I am keeping an eye on it. Obviously, we shouldn't expect it for another 10 minutes, but I do already have it up as well.
Beautiful, good, good, good. We gonna listen to him today. We'll give him 20 minutes or
We'll
so.
get yeah, we'll give a couple minutes, see what he talks about. Let's see if there's anything that he says that might give us a nice little entry. Anything that we do take is going to be extremely low risk if we do take it. I don't even think we're going to take anything, but extremely low risk. Like, but we'll see, man. We'll see.
Yeah, I probably wouldn't. I probably wouldn't. I'd probably risk 0.5% maybe.
Let's see.
They would have to give me a really good price too.
Yeah, really good price. No cap. Let's see.
Putin punch in the air after the drone incident. Yeah, I don't know if you all saw that video. That looked so fake. I'm not even gonna lie to you. I'll just be honest. Like you telling me that little single drone all the way from wherever they flew it from, all the way over there to possibly take out Putin, like then there's no way. So,
uh
if that's the case, I'm surprised Russia didn't already lose the war.
You know what's crazy? We talked about that too today, this morning on the call and watched the video
Oh, did
together.
you?
Yeah, everybody was
Yeah,
saying
nah,
that
that
too.
was
Like,
so funny, bro. I'm like, there's no way, bro. I'm like, Putin just thought this would be funny. I'm like, Putin was bored. He was like, I feel too safe. Just blow up a drone above the building or something.
oh man, nah,
I don't know. I think I could coordinate a better attack on Putin than whatever that was.
bro, the only reason why I would think it's fake is like, how are you gonna allow something get that close to the Kremlin?
That's what I'm saying, bro. Like, where'd
Like,
they fly that from? Down the street?
bro,
Like,
like where is their air defense system? Like that's my biggest issue. Like, bro, how do you
yeah,
let something get that close to the Kremlin, bro?
yeah.
Like
That's what I'm
what?
saying. There's no way.
Somebody had said on the call earlier that it was Hasbullah playing with a drone. I almost started dying,
That's
bro.
what it seems
Wow.
like, bro. There's no way.
He said it was
Russia just
Has.
be having fun. I'm telling you. There was
Oh
like,
man.
and there was only one too. Like, what was that little drone gonna do, bro? Like that,
I mean, they
like
said there
I don't
was
know.
two, but I've only seen one on camera.
I only seen one explode. There could have been a second one, but like
Yeah.
even then, they would have needed like an army of those drones. Like, are you kidding me?
Bro, if it's real though, I would be concerned. Like, how you gonna let a drone get that close to you, bro? That's my biggest thing. Like, how do you get, bro? I don't think there will ever be a chance where anything gets close to the White House or the Pentagon, bro, because our defense system
Yeah,
is gonna see
no,
it miles
no.
away, bro.
Bro,
This,
if I was in Russia or if that happened in the United States where like a drone like blew up like basically touching the White House,
I would be scared, bro.
I would have no faith in the government. I'm like, what are you
Yeah,
kidding me, bro?
that's what
Like
I'm
unless it
saying.
was like obviously like an inside job, like somebody set up like right out. I mean, even then I would be like I'd be like, I'm surprised Secret Service wasn't on this in like the matter of 30 seconds, you know? So
That's what I'm
yeah,
saying,
I
bro.
refuse to believe it. I think it's
It's
just
tough.
I don't know.
I don't know, man. I don't
Putin
know,
got
man.
bored and was like, let's test this out. Let's see who falls
Let's
for this.
see. Abel really said Putin he can push the button on nuclear, but I told him he's not allowed to make that decision by himself. It takes a lot of reach, bro. If you don't think Putin can just make the decision himself, bro, I don't think you understand how much of a lunatic he is, bro. Like that's been the biggest fear, bro. That's something. Why do you think we haven't really, although we intervened in Ukraine by providing assistance, why do you think that we actually didn't escalate too much? Like actually provided bodies, because they know that Putin, one thing can cause Putin to just be an idiot and go crazy.
Yeah, I don't think Putin's that destructive though. I
I don't
think he
think
might use it as like threats,
that's
but I
all they're
think like
doing.
at like yeah, it's all talk. He knows he's I think he like Like if somebody's gonna actually push a button, you got to worry about like North Korea. Like North Korea is and like Iran are one of the places that you have to worry about like actually being dumb enough to send something up. And maybe not even Iran. Iran might even be that might even be a little extreme, but they're definitely in like if I
I
had to
don't
put
think
somebody in
Iran.
second
It
place,
would.
I'd put them in second place.
Yeah, I agree. I think North Korea have a bigger chance for sure
Yeah,
of
Putin's
doing
not that
something.
dumb. Putin, like if Putin was on his deathbed, maybe he'd see it as an option. But other than that, like you're I don't know. You're assuming too much.
Yeah, let's see, man. Let's see. Some
But
drones
if
are
you don't think that he
quiet.
has the power to push the button, you crazy too. It is true that if he issues the order, that the person that got the order could maybe be like, I don't want to do this. But if he really wanted the button pushed, they will either replace that person or kill them or go around them. Like there's nothing really stopping him, like there is in the United States. Like Biden can't just be like, "Hey," walk into his office and push the button. Like that's not how that works here. But
Yeah,
if you don't think that's how that works in some other countries, you don't really
that's
understand how close we are to nuclear war at any at
bro.
any given moment.
That's what I'm saying. Like, you gotta understand, bro. Like, yeah, I don't even want to keep on going, but yeah, bro, Putin is a lunatic. Like, I see what you're saying, Eric, bro. Obviously, no country wants that, bro. But when your back is against the wall and now your pride is bigger than common sense, bro, which Putin is probably that type of person, bro. Like, I don't know, but I agree. If it does happen, bro, then yeah, it's gonna be insane. I don't think anybody survives a
Yeah, I don't
nuclear
think it'll.
war.
I don't even you gotta worry about it.
I don't think so either. But hey,
Honestly,
man, I got
they're sending off a different type of nuke when you talk about things like bricks and stuff like that. That's like the real nuke they're trying to set off.
yeah. And the only
It's
reason why, because we were talking about it earlier, I'm like, listen, I just hope something like, because again, the Kremlin is taking that as a threat on his life. Those are strong statements. That's why I was like, I hope this don't cause him to try to do something stupid. Because a threat on, if
uh
somebody's, well, no matter the size of the drone, if you come for me, bro, I'm coming at all ends to try to figure out who it was, and I'm figuring out something, bro. So think
yeah,
about Putin,
that's an
bro.
interesting take too. I mean, I
Like,
didn't even think of that. I mean, they would have to real. I mean, I'm so caught in the idea that it was just Russia themselves trying to like instigate stuff that
look at the video right here.
if it yeah, there's the footage. I mean, that's what I'm saying though. Look at this thing though. Like this is a joke. Like, look at this little drone. Like, where'd this thing come from, bro? And then look, it doesn't even come into contact with anything.
Why does it seem like there's people right here on the side, or am I tripping? Or those flags,
No, there definitely are people right there. Yeah, you're definitely right.
bro?
I
Like,
mean, like they couldn't even take out those guys. And those guys are on the outside of the building.
how do you, bro? How do you
like,
let it get this close, bro? Like that's my, like how you let it get this close, bro?
bro, they didn't even burn the flag that's flying.
Oh man,
Like, that's what I'm saying. It just looks fake. It looks staged. I don't know. It's not it's, yeah. J Pow after raisin rates.
he's like, who cares? Yeah, that fixed it. That dude is so funny, bro.
I know that meme's been going around. That's funny though.
Let's
That's gonna
see.
be him in about 4 minutes though.
Let's see. Fed opens door. Yep, we knew that.
Yeah, that's the biggest headline. We will continue reducing balance sheet. That's not a surprise.
Not at all.
Yeah, we'll see what he has to say in 3 minutes here. Again, market response. I mean, I probably should have just bought the S&P, but it is what it is.
We are again. This is interesting. We are back at literally highest levels since 2006, 2007. So we're talking about 20-year highs in terms of interest rates, which is interesting.
Yeah, which is also my why that they're looking to pause because they might not want to go any higher than that. Do you know the Fed funds rate has never made a new all-time high or has
That's
never made a
crazy.
fresh high?
That's crazy.
So if we do go any higher, it'll be the first time the Fed fund rate actually creates like a structural high.
Look at this. This is incredible. Fed statement: U.S. banking system is sound. U.S. Treasury, U.S. banking system is on solid foundation. Banking system remains resilient. Meanwhile, over 1 trillion in deposits have left U.S. banks over the last year. The regional banking sector is down 40%, and the U.S. banking sector has lost 2 trillion market cap. All while the Fed just raised interest rates to a 16-year high. The disconnect between the Fed and reality, and that's my biggest thing. This is what I was saying. Like, I don't know, because there is a massive disconnect from what they're saying and what's actually
I
occurring.
think it's just because the banks that have been failing and that are at risk of failing just aren't large enough for the Fed to care. So it's like it is concerning, but the Fed is just like not to the level that we care.
There was the The sector.
But again, it's for regional bank stocks too. So
Yeah, it is a lot of regional. I mean,
maybe
it could.
again, it's small enough that the Fed brushes it off because they just know that the bigger banks will absorb it. That's what they're
It,
counting on. They're just counting on the J.P. Morgans to come in and just buy it up, and and so kind of like, yeah, like I said, it's a game of big bank eats small bank. But
that's something we spoke about that too in the past as well when the whole
yeah,
situation
we
started.
mentioned it a few times.
What the
It's
hell? I don't know what's going on there. Let's see. Yeah, no, it's
real
interesting,
rates
man.
positive for first time since 2019.
Oh man, I don't even want to see what ends up there. Let's see. All right, come on, man. Let's get back to the news. Let's see. Jim Cramer. Let's actually check what the hell Jim Cramer's saying.
Oh no, is that what he posted that today? That's
We're about to
today.
confirm it.
Oh boy. Everybody throw out the bullish bias. Jim Cramer says that it's gonna rally and pivot.
As I
Oh
said,
boy.
I can't confirm that though.
What do you
Nah,
say
he
about
said it.
Starbucks?
He had to have said it. Did he say it?
I can't see anything just yet.
No, maybe not. Was it fake?
Great bank while it lasted, bro. This guy's an idiot. Literally a month ago
It was such a good bank that it failed.
bro. Like that's hilarious. Hold on, bro. We gotta bring up Jim Cramer and First Republic Bank because he literally said about a month or two
Yo,
ago. That it's a
Powell
great
speaking,
bank.
by the way.
Oh, is he really? Okay, let's bring this
Or
up real
well,
quick. It's
he
getting
should
there.
be. He's a little slow. He's gotta waddle over there and all that. Look at all these sharks though. You see all these people on the screen? Those are the sharks. They got the questions ready.
Oh yeah, he's got.
Stay woke. That guy right there in the tan, he's ready. He don't even got a jacket. He came prepared.
He's the
Did
only.
you guys see that thing on the news where like Joe Biden had a script of like all the questions of the journalists? Like,
Yeah, because he absolutely needs it. That's also why they're not allowing him debate. Did you hear that? That's even more important. The Democrats are not holding a debate, so they're not going to allow Biden to debate anybody for the preliminaries or whatever.
wow.
Let's see what this man got to say, family. Let's tune in.
Good afternoon. Before discussing, let me comment briefly on recent developments in the banking sector.
Let me know if I need to turn up the volume,
Conditions
family. I
in
can.
that sector have broadly improved
You
since
might
early
have to.
March, and the U.S. banking system is sound and resilient. We will continue to monitor conditions in the sector. We're committed to learning the right lessons from this episode, and will work to prevent events like these from happening again. As a first step in that process, last week we released Vice Chair for Supervision Barr's review of the Federal Reserve's supervision and regulation of Silicon Valley Bank. The review's findings underscore the need to address our rules and supervisory practices to make for a stronger and more resilient banking system, and I'm confident that we will do so. From the perspective of monetary policy, our focus remains squarely on our dual mandate to promote maximum employment and stable prices for the American people. My colleagues and I understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC raised its policy interest rate by a 0.25 percentage point. Since early last year, we've raised interest rates by a total of 5 percentage points in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. We are also continuing to reduce our securities holdings. Looking ahead, we'll take a data-dependent approach in determining the extent to which additional policy firming may be appropriate. I will have more to say about today's monetary policy actions after briefly reviewing economic developments. The U.S. economy slowed significantly last year, with real GDP rising at a below-trend pace of 0.9%. The pace of economic growth in the first quarter of this year continued to be modest at 1.1%, despite a pickup in consumer spending. Activity in the housing sector remains weak, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. The labor market remains very tight. Over the first 3 months of the year, job gains averaged 345,000 jobs per month. The unemployment rate remained very low in March at 3.5%. Even so, there are some signs that supply and demand in the labor market are coming back into better balance. The labor force participation rate has moved up in recent months, particularly for individuals aged 25 to 54 years. Nominal wage growth has shown some signs of easing, and job vacancies have declined so far this year. But overall, labor demand still substantially exceeds the supply of available workers. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in March, total PCE prices rose 4.2%. Excluding the volatile food and energy categories, core PCE prices rose 4.6%. Inflation has moderated somewhat since the middle of last year. Nonetheless, inflation pressures continue to run high, and the process of getting inflation back down to 2% has a long way to go. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by a 0.25 percentage point, bringing the target range to 5 to 5.25%. And we're continuing the process of significantly reducing our securities holdings. With today's action, we have raised interest rates by 5 percentage points in a little more than a year. We are seeing the effects of our policy tightening on demand in the most interest rate sensitive sectors of the economy, particularly housing and investment. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. In addition, the economy is likely to face further headwinds from tighter credit conditions. Credit conditions had already been tightening over the past year or so in response to our policy actions and a softer economic outlook. But the strains that emerged in the banking sector in early March appear to be resulting in even tighter credit conditions for households and businesses. In turn, these tighter credit conditions are likely to weigh on economic activity, hiring, and inflation. The extent of these effects remains uncertain. In light of these uncertain headwinds, along with monetary policy restraint we've put in place, our future policy actions will depend on how events unfold. In determining the extent to which additional policy firming may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. We will make that determination meeting by meeting based on the totality of incoming data and their implications for the outlook for economic activity and inflation. And we are prepared to do more if greater monetary policy restraint is warranted. We remain committed to bringing inflation back down to our 2% goal and to keep our longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thanks, Gina. Hi, Gina Smilik, New York Times. Thanks for taking our questions. I wonder if you could tell us whether we should read the statement today as a suggestion that the committee is prepared to pause interest rate increases in June. And I also wonder if the Fed staff has in any way revised their forecast for a mild recession from the March minutes. And if so, what a recession like what they're envisioning would look and feel like when it comes to, for example, the unemployment rate.
So, taking your question, of course, today our decision was to raise the federal funds rate by 25 basis points. A decision on a pause was not made today. You will have noticed that in the statement from March, we had a sentence that said the committee anticipates that some additional policy firming may be appropriate. That sentence is not in the statement anymore. We took that out, and instead we're saying that in determining the extent to which additional policy firming may be appropriate to return inflation to 2% over time, the committee will take into account certain factors. So that's a meaningful change that we're no longer saying that we anticipate. And so we'll be driven by incoming data, meeting by meeting, and we'll approach that question at the June meeting. So the staff's forecast is so. Let me start by saying that that's not my own most likely case, which is really that the economy will continue to grow at a modest rate this year. And I think that's so different people in the committee have different forecasts. That's my own assessment of the most likely path. Staff produces its own forecast, and it's independent of the forecasts of the participants, which include the governors and the Reserve Bank presidents, of course. And we think this is a healthy thing, that the staff is writing down what they really think. They're not especially influenced by what the governors think, and vice versa. The governors are not taking what the staff says and just writing that down. So it's actually good that the staff and individual participants can have different perspectives. So broadly, the forecast was for a mild recession, and by that I would characterize as one in which the rise in unemployment is smaller than has been typical in modern era recessions. I wouldn't want to characterize the staff's forecast for this meeting. We'll leave that to the minutes, but broadly similar to that.
Rachel. Thank you, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions. I'm wondering if you can talk about the account of possible effects of a debt limit standoff. You've said repeatedly that the ceiling must be raised, but do you see any economics effects of even getting close to a default, and what type of situation would that look like?
So I wouldn't want to speculate specifically, but I will say this. These are fiscal policy matters, for starters, and they're for Congress and the administration, for the elected parts of the government to deal with, and they're really consigned to them. From our standpoint, I would just say this. It's essential that the debt ceiling be raised in a timely way so that the U.S. government can pay all of its bills when they're due. A failure to do that would be unprecedented. We'd be in uncharted territory, and the consequences to the U.S. economy would be highly uncertain and could be quite averse. So I'll just leave it there. We don't give advice to either side. We just would point out that it's very important that this be done. And the other point I'll make about that, though, is that no one should assume that the Fed can protect the economy from the potential, short and long-term effects of a failure to pay our bills on time. It would be so uncertain that it's just as important that we never get to a place where we're actually talking about or even having a situation where the U.S. government's not paying its bills.
And just to follow up, was discussion around the uncertainty of a possible standoff, did that affect today's monetary policy decision at all?
I wouldn't say that it did. It was, of course, it's something that came up. We talk a lot about risks to the outlook, and that come up. A number of people did raise that as a risk to the outlook. I wouldn't say that it was important in today's monetary policy decision yet.
Steve.
Chairman. Oh, thank you. Yeah, Mike. Steve Leisman, CNBC. Can you tell us what the Federal Reserve Board did in the wake of that February presentation where you were informed that Silicon Valley Bank and other banks were experiencing interest rate risks? And can you tell me what supervisory actions you've done in the wake of the recent bank failures to make sure that banks are currently appropriately managing interest rate risk? And kind of part three, but it's all the same question here. Do you still think this separation principle, that monetary policy and supervision can be handled with different tools? Thank you.
Sure. So the February 14th presentation, I didn't remember it very well, but now, of course, I've gone back and looked at it very carefully. I did remember it. And what it was a general presentation. It was an informational briefing of the whole board, the entire board. I think all members were there. And it was about interest rate risk in the banks and lots of data. And there was one page on Silicon Valley Bank, which talked about the amount of losses mark-to-market losses they had in their portfolio. There was nothing in it about, that I recall anyway, about the risk of a bank run. So it was, I think the takeaway was they were going away to do an assessment, a horizontal assessment of banks. It wasn't it wasn't presented as an urgent or alarming situation. It was presented as an informational, non-decisional kind of a thing, and I thought it was a good presentation, and as I said, did remember it. In terms of what we're doing, of course, I think banks themselves are many banks are now are attending to liquidity and taking opportunity now, really since the events of early March, to build liquidity. You asked about the separation principle. Like so many things, it's very useful. But ultimately, it has its limits. I mean, I think in this particular case, we have found that the monetary policy tools and the financial stability tools are not in conflict. They're working well together. We've used our financial stability tools to support banks through our lending facilities, and at the same time, we've been able to use our monetary policy tools to foster maximum employment and price stability.
Mr. Chairman, I'm sorry. I don't mean to be argumentative, but the staff report said SVB has significant interest rate risk. It said interest rate risk measurements failed at SVB, and it said banks with large unrealized losses face significant safety and soundness risk. Why was that not alarming?
Well, I mean, I didn't say it wasn't alarming. It was, they're pointing out something that they're working on and that they're on the case. That I'm not sure whether they mentioned. I think they did actually. They mentioned that they had taken regulatory action, or supervisory action in the form of matters requiring attention. So I think that was also in the presentation. I think it was to say, yes, this is a bank, and there are many other banks that are experiencing these things, and we're on the case.
Thank you.
Go to Victoria. Hi, Chair Powell. I wanted to ask you, obviously, with the recent bank turmoil, we've seen multiple banks buy other banks, and I was just curious whether you think that further consolidation in the banking sector would increase or decrease financial stability, and whether you have any concerns about the biggest bank in the U.S. Getting even larger.
So, we certainly don't, and I don't have an agenda to further consolidate banks. Consolidation has been a factor in the U.S. banking industry really since interstate banking, and before that even. It goes back more than 30 years. When I was in the government a while back, I think there were 14,000 banks. Now there are 4,000 and change. So that's going on. I personally have long felt that having small, medium, and large-sized banks is a great part of our banking system. The community banks serve particular customers very well. Regional banks serve very important purposes, and the various kinds of GSIBs do as well. So I think it's healthy to have a range of different kinds of banks doing different things. I think that's a positive thing. Is it a financial? So I would just say, in terms of J.P. Morgan buying First Republic, the FDIC really runs the process of closing and selling a closed bank completely. That is their role, so I really don't have a comment on that process. As you know, there's an exception to the deposit cap for a failing bank. So it was legitimate, and I think the FDIC, I believe, is bound by law to take the bid that is the least cost bid. So I would assume that's what they did.
So, but do you have any concerns about the fact that they're getting larger in general?
So I think it's probably good policy that we don't want the largest banks doing big acquisitions. that is the policy, and but this is an exception for a failing bank, and I think it's actually a good outcome for the banking system. It also would have been a good outcome for the banking system had one of the regional banks bought this company, and that could have been the outcome. But ultimately, we have to follow the law in our agencies, and the law is it goes to the least cost bid.
Colby. Thank you. Colby Smith with the Financial Times. At the March meeting, you mentioned that a tightening of credit conditions from the recent bank stress could be equal to one or more rate increases. So given developments since then, how has your estimate changed?
Yeah, I think I followed that up by saying it's quite impossible to have a precise estimate of the words to that effect. But in principle, that's the idea. You know, when we've been raising interest rates, and that raises the price of credit, and that, in a sense, restricts credit in the economy, working through the price mechanism. And you know, when banks raise their credit standards, that can also make credit tighter in a kind of broadly similar way. It isn't possible to make a kind of clean translation between one and the other, although firms are trying that, and you know, we're trying it. But ultimately, we have to be honest and humble about our ability to make a precise assessment. So it does complicate the task of achieving, you know, a sufficiently restrictive stance. But I think conceptually, though, we think that you know, interest rates will, in principle, we won't have to raise rates quite as high as we would have had this not happened. The extent of that is so hard to predict because we don't know how persistent these effects will be. We don't know how large they'll be and how long they'll take to be transmitted. But that's what we'll be watching carefully to find out.
Just to quickly follow up, what does it suggest about the scope for the committee to pause rate increases perhaps as early as next month, even if the data remains strong then, if it's having some kind of substitute effect?
This is just something that we have to factor in as we want to find ourselves. So I guess I would say it this way. The assessment of the extent to which additional policy firming may be appropriate is going to be an ongoing one, meeting by meeting, and we're going to be looking at the factors that I mentioned that are listed in the statement, the obvious factors. That's the way we're going to be thinking about it. That's really all we can do. As I say, it does complicate. We have, you know, a broad understanding of monetary policy. Credit tightening is a different thing. There's a lot of literature on that, but translating it into rate hikes is uncertain. Let's say it adds even further uncertainty. Nonetheless, we'll be able to see what's happening with credit conditions, what's happening with lending. There's a lot of data on that, and you know, we'll factor that into our decision making.
Howard.
Howard Schneider with Reuters. Thank you. So noting that the statement dropped the reference to sufficiently restrictive, I was wondering, given your baseline outlook, whether you feel this current rate of 5 to 5.25% is in fact sufficiently restrictive.
So that's going to be an ongoing assessment. We're going to need data to accumulate on that. Not an assessment that we've made. That would mean we think we've reached that point, and I just think it's not possible to say that with confidence now. But nonetheless, you will know that the summary of economic projections from the March meeting showed that at that point in time that the median participant thought that this was the appropriate level of the ultimate high level of rates. We don't know that. We'll revisit that at the June meeting, and that's, you know, we're just going to have to, before we really declare that, I think we're going to have to see data accumulating and you know, make that, as I mentioned, it's an ongoing assessment.
A follow-up on credit, but could you give us a sense of what the SLOOS survey indicated? It was already, I think 45% of banks were tightening credit as of the last survey. What did this one show, and how did that weigh into your deliberations?
So we're going to release the results of the SLOOS on May 8th, in line with our usual time frame. And I would just say that the SLOOS is broadly consistent when you see it with how we and others have been thinking about the situation and what we're seeing from other sources. You will have seen the Beige Book and listened to the various earnings calls that indicate that mid-sized banks some of them have been tightening their lending standards. Banking data will show that lending has continued to grow, but the pace has been slowing really since the second half of last year.
Let's go to Nick.
Nick Tamaros of the Wall Street Journal. Chair Powell, the argument around the end of last year and the beginning of this year to slow down the pace of increases was to give yourself time to study the effects of those moves. After the bank failures in March, as you've discussed, the Fed staff projected a recession starting later this year. So my question is why it was necessary to raise interest rates today, or put differently, if the whole point of slowing down the pace was to see the effects of your moves, and now you've, for the last 2 meetings, been seeing the effects of those moves, why did the committee feel it was necessary to keep moving?
Well, the reason is that we, again, with our monetary policy, we're trying to reach and then stay at for an extended period, a level of policy stance that's sufficiently restrictive to bring inflation down to 2% over time. And that's what we're trying to do with our tool. I think slowing down was the right move. I think it's enabled us to see more data, and it will continue to do so. So we really, we have to balance. We always have to balance the risk of not doing enough and not getting inflation under control against the risk of maybe slowing down economic activity too much. And we thought that this rate hike, along with the meaningful change in our policy statement, was the right way to balance that.
And just to follow up, you said in response to Howard's question, you'll need data to accumulate to determine if this is a sufficiently restrictive stance. Does that data need to accumulate, or could it accumulate over a longer period than a 6-week intermeeting cycle? As I mentioned, I would just say that this assessment will be an ongoing one. You can't, with economic data, you can't. You've seen, take inflation from it. Look back. We've seen inflation come down, move back up 2 or 3 times since March of 2021. We've seen inflation have a few months of coming down and then come right back up. So I think you're going to want to see that, that a few months of data will persuade you that you've got this right, kind of thing. And we have the luxury. We've raised 500 basis points. I think that policy is tight. I think real rates are probably, that you can calculate them many different ways, but one way is to look at the nominal rate and then subtract a reasonable estimate of let's say 1-year inflation, which might be 3%. So you've got 2% real rates. That's meaningfully above what many people anyway, would assess as the neutral rate. So policy is tight, and you see that in interest-sensitive activities, and you also begin to see it more and more in other activities. And if you put the credit tightening on top of that and the QT that's ongoing, I think you feel like we may not be far off, or possibly even at that level.
We're going to give you like 4 more minutes, family.
Thank you very much, Chair Powell. Edward Lawrence with Fox Business. So if the Federal Reserve gets down to the 3% inflation, as the projections show at the end of this year, or close to it, would it be okay for you for a prolonged period of 3% inflation and hoping for some outside event to move down to 2% target?
I think we're always going to have 2% as our target. We're always going to be focusing on getting there.
Would you be okay with a prolonged 3%?
It's let me just say that's not what we're looking for. We're looking for inflation going down to 2% over time. I mean, that's not a question that's in front of us, and it would depend on so many other things. But ultimately, we're not looking to get to 3% and then drop our tools. We have a goal of getting to 2%. We think it's going to take some time. We don't think it'll be a smooth process, and I think we're going to need to stay at this for a while.
How does the other side of the mandate, the jobs side, once you get to 3%, going from 3 to 2, how does the other side of the mandate balance?
I think they will both matter equally at that point. Right now, you have a labor market that's still extraordinarily tight. You've still got 1.6 job openings, even with the lower job openings number, for every unemployed person. We do see some evidence of softening in labor market conditions, but overall, you're near a 50-year low in unemployment. Wages, you all will have seen the wage number from late last week, and it's whenever it was, and
it's a couple percentage points above what would be consistent with 2% inflation over time. So we do see some softening. We see new labor supply coming in. These are very positive developments. But the labor market is very, very strong. Whereas inflation is running high, well above our goal. And right now we need to be focusing on bringing inflation down. Fortunately, we've been able to do that so far without unemployment going up.
Matt.
Hi, Chair Powell. Matthew Boesler with Bloomberg News. So many analysts noted at the time of the March FOMC meeting that at least half of Fed officials' projections did imply or seem to imply that a recession was in their baseline forecast as well, given the strong first quarter GDP tracking estimates. And so I'm just wondering if you could kind of elaborate on, why you're optimistic that a recession can be avoided, given that that's the Fed staff's forecast, possibly also the broader committee's forecast as well, and also, of course, most private sector forecasters.
Yeah, I don't think, I know what's printed in the Summary of Economic Projections and all that. I don't think you can deduce exactly what you said about what participants think, because you don't know what they were thinking for first quarter GDP at that point. They could have been thinking about a fairly low number. Anyway, in any case, I'll just say I continue to think that it's possible that this time is really different. And the reason is there's just so much excess demand, really, in the labor market. It's interesting, as we've raised rates by 5 percentage points in 14 months, and the unemployment rate is 3.5%, pretty much where it was, even lower than where it was when we started. So job openings are still very, very high. We see by surveys and much evidence that conditions are cooling gradually, but it really is different. It wasn't supposed to be possible for job openings to decline by as much as they've declined without unemployment going up. Well, that's what we've seen. So there are no promises in this, but it just seems to me that it's possible that we can continue to have a cooling in the labor market without having the big increases in unemployment that have gone with many, prior episodes. Now, that would be against history. I fully appreciate that. That would be against the pattern. But I do think that the situation in the labor market with so much excess demand, yet, wages have been moving down. Wage increases have been moving down, and that's a good sign, down to more sustainable levels. So I think it's still possible. I think. The case of avoiding a recession is, in my view, more likely than that of having a recession. But it's not that the case of having a recession is. I don't rule that out either. It's possible that we will have what I hope would be a mild recession.
The committee also noted in March that wage growth was still well above levels that would be consistent with 2% inflation. Do you see that as well? And could you kind of explain, how you come to that judgment?
Sure. So we look at a range of wage measures, and then that's a nominal. And then so you assume wages should be equal to productivity increases plus inflation. And so you can look at the Employment Compensation Index, average hourly earnings, the Atlanta Wage Tracker, compensation per hour, basically those four, and many others, and you can look at what they would have to run at over a long period of time for that to be consistent with 2% inflation. They can deviate. Corporate margins can go up and down, and there is a feature of long expansions where they do go down, where labor gets a bigger share toward later in a recession. Later in an expansion. So yeah, and we calculate those, and you have to take the precision with a degree of salt. But I would say that what they will show is that if wages are running at 5%, 3% is closer to where they need to be. Wage increases closer to 3%, roughly, is what it would take to be consistent with inflation over a longer period of time.
All right, family, man. I'm not going to keep on letting him talk. It's been a lot of great questions that were being asked, but he's doing a phenomenal job of pretty much staying very neutral with the approach itself right now. I actually want to hear Skaggs' opinion, bro, if you're there, on what was said so far, and also looking at the indices. We really haven't seen much movement. We just seen a lot of whiplashing back and forth here. And if you guys do want to continue the press conference, fam, just go right to the Federal Reserve website itself or the YouTube channel, and you'll be able to hear it right there. But Skaggs, what do you think, bro, so far based on what's been said and what the market is reacting towards?
Yeah, the market just doesn't seem to want to pick a direction quite yet. And again, I think that's because, most people were once again betting that they were going to say that they were ready to pause. And that is not what he's saying. They have changed their stance, their wording a little bit, which again makes sense, right? They don't want to say anything until that June meeting. They don't want to, send the market in a whirl just because they made some minor adjustments. However, I think, just like I thought at the beginning of the call, I'm the same bias, bro. I'm still bullish indices, bearish dollar. The pause is coming. It's clear. It's clear to me in the data, right? Again, they said they're going to take the data meeting by meeting. Cool. Then I'll keep playing CPI and PPI and PCE. As long as the numbers stay the way I want them to stay, I'm going to keep trading that bullish bias. So I don't know if I'm specifically, I've been looking at the SPX here. I keep thinking I'm missing it against 41.15. It doesn't seem like she's doing anything yet. Maybe she is waiting for Powell just to kind of wrap up here. I will still look to trade this bullish. However, at this point, I think I'm going to just wait till tomorrow trading day. There's really, I could play inside of all these wicks here, but I'd rather see what happens during the Asian session. Maybe we swipe below 41.10. And maybe I can just get in below all of this noise in a less volatile time, right? So I could get a tighter stop loss. I don't have to run, 15 points. And I'll just see kind of where we're at later. But everything that he said, again, you could just tell he's trying his best to avoid everybody believing that they are ready to pause, even though they are ready to pause. So... yeah, that's what I took from it, bro. But he is kind of just circling now at this point.
Yeah, I agree. I'm with you as well. Like he's doing a good job with trying to answer, but he's also being very cautious on how he answers it. Obviously for obvious reasons, but yeah, these markets are not doing much, guys. Look at this. Ever since he started speaking, we haven't. We've literally just been going back and forth, whiplashing, not doing nothing on anything, right? Indices, all of them are doing the same exact thing. The dollar also ended up having that spike down, came back up. Gold also spike up. It's just, market really doesn't know what to expect right now. I think it's just also being patient as well. So if you are trying to trade in these market conditions, man, good luck. I will say that, man. Good luck. Just look for the highs and the lows to try to get, if anything. If I was to do anything, man. But I'm personally also going to sit out. I'm not going to try to force anything. Really haven't gotten no clear, concise information from him, in my opinion. So I'll probably be sitting out as well. All right, but yeah, that's pretty much the news. Like I said, if you guys want to continue, I don't know if he's still going, but yeah, if you guys want to continue, I'll drop the actual link in the chat for y'all, so you guys can go ahead and watch that on your own if you guys truly want to. But I think that's pretty much all we have for you guys today, unless the boys have anything.
Nah, I'm just reading some of the comments in chat. Yeah, somebody said small banks collapse, so it's easier to bring in CBDCs. There's no correlation there. The small banks, ask yourself, in order for you to assume that that's true, ask yourself, what are the small banks doing that prevents them from making a CBDC? And the answer is nothing. The banks are at the will of the bigger banks and regulators. So if the regulators said they're doing a CBDC, those small banks have no say. They can't do anything about it. So that's been in the works for so long. Them small banks, they ain't got nothing to do with it. It's just consolidation of money. But the CBDCs are coming regardless of how many big banks or small banks are out there. Yeah. But yeah, it seems like a lot of people are on track with their same thoughts. Yeah, some people are in some NASDAQ buys. Again, I just don't. The market's too choppy for me. I'm just not looking to play inside this volatility. I know I can get in at a safer time with less volatility, less noise, less headlines going around. Let me just check my headline thing here. Yeah, there's nothing specifically. So I'm pretty good. Hopefully we'll see y'all later in the week, specifically tomorrow for the live trade rooms. Head on over to ProfitSociety.co, grab that premium membership. If you guys are not fully aware of what we offer at Profit Society, there is a call happening tonight at 8 p.m. hosted by Kyle and able. They will be going over all of that, breaking it down, showing you guys exactly what you get, how we can help you guys hit that state of profitability. So make sure you guys tap in. The links will be in the Discord, the Telegrams, all over social media. We love and appreciate y'all, family. That's all I got for you guys. So hopefully you guys enjoyed the stream, got some value, know how to play the future. Again, I'm still bearish dollar, bullish indices, but we got to wait for the perfect opportunities to strike on that. But that's all I got, man. Love and appreciate y'all. I am personally out.
And the best timing for that is definitely gonna be tomorrow with our New York session, family. So make sure you guys are there, because we are definitely gonna be looking for some opportunities. But we appreciate you guys for jumping on. Thank you guys for being with us, and we will see you guys in the Discord. If you guys are not in there just yet, let me send the Discord really quickly so you guys are aware. If you guys are not in it, definitely go ahead and join it. If you guys want access to the good stuff, then make sure to join the premium. So the premium section of the Profit Society, and you'll get access to the secret portions of the Discord, right? But family, we appreciate y'all. We love y'all, and we'll talk to you guys later.